So as I work on these credit spreads, it seems I get a lot of questions when I do this, and so just to supplement what we did on Baidu for a bull put spread, I thought I'd go ahead and just take an extra time, do a video here, and hopefully this will help clarify the concepts that go along with the post. So here we go. This is Baidu, ticker symbol BIDU. It's a Chinese Google is kind of what you might understand them as. And what I've done here is I went in and I looked at how Baidu has come down and it's tested this support level right at about $100. You see where it's hit this blue line several times? And it came down there, and this was, light volume, Christmas, New Year's, and it came here and it started to bounce yesterday and today. Okay, I've got an increase in volume. A couple other things that I want to draw your attention to is stochastics down in here are starting to cross up. Come over here, it's flatlined, come down on the moving averages, and it's just now north of that 10-day moving average, which I like. I've got MACD that is crossing from the sentiment from bearish, bearish, bearish to more neutral as we get closer to that. So, I'm looking at all these things, and then I come out here and I put in my Bollinger Bands, and it gets a little crowded up in here because I've got these annotations, but you can see how it's right in here. It's starting to get just north of that Bollinger Band moving average, which again I really like. Relative strength index is starting to pick up, cash flow is still strong, so technically I really like the trade. Now the obvious question might be, well wait, if you like it so much, why wouldn't you just buy the call? Well, if I buy a call, I have a 1 in 3 chance of making money. By doing a bull put spread, I more than double my odds of being profitable. So I came out here and I just made some annotations. I've got about 3 weeks in this trade. That's what this vertical black line is showing the third Friday of the month, which is the expiration. And so I came in here and you can see that I sold to open the January 93 put, and that was being offered 99 cents by $1.01. And I always get the one I don't want, so I'm going to sell that for 99 cents. And then I'm going to go in and buy an insurance policy on this, because if I just sold that 93 put, that would be a naked put, and it'd tie up a bunch of cash. So I'm going to limit my risk and buy an insurance policy on the insurance policy that I sold, and I buy the January 91 put, and that's being offered 71 cents by 74. So the difference between 99 and 74 gives me a 25-cent credit. Now let's talk about our risk in this trade. The difference between 93 and 91 is $2. So I have created a $2 vertical spread. So my brokerage account is going to require that I have some money on hold. Now they're going to give me 25 cents in credit, so the difference between 93 and 91, $2, subtract my 25-cent credit, has a maximum risk exposure of $1.75. So cash in of 25 cents divided by a cash out of $1.75, that creates a 14% rate of return in the next 3 weeks. So if the stock goes up, I keep the premium. Stays flat, keep the premium. Goes down almost $8 here, and I walk away with a 14% rate of return. So I really like my odds of winning here in doing this bull put spread. As long as it stays above that price point, I'm golden. And so that's my rationale in doing it. Let me take it a step further and share this with you. Now this is a practice account. I did it in my funded account, but I just wanted to go over here while the market's open and just kind of give you an idea of what I was looking at in the option chain, because some people get a little bit confused in the next step. They go, wait, I love the rate of return, I like the chart, I do all, but what's the next step? So let's just take it through the next step. So this is Baidu, ticker symbol BIDU. So it gives me all the pertinent information right up in here, and then right down the middle of my screen is all of my strike prices. Now the stock's trading at about $100, so I need to scroll down quite a bit to get closer to my at the money strike price. And actually it starts to highlight the at the money strike prices. So I come in here and I got way out of the money. Okay, since I'm doing a put, I come down to the right hand side. You can see puts are up here, calls are over here. So I come over here to the put side of my screen. Now things have changed a little bit from what I did, but let's look at this. Let's just recreate it close enough here. If I sell the 93s, right now it's being offered 81 by 84. I always get the one I don't want, so I would take in 81 cents. Now if I were to go and have a $1 strike price, I could buy the 92s and take in a dime on a $1 strike price. That's a 10% rate of return. and not a whole lot of risk exposure. Or I could come out here and do a $2 vertical spread and take in roughly 60 cents. I'm sorry, 20 cents. Take in 20 cents on that. Again, about a 10% rate of return. So at this point, you might just do a $1 vertical spread with how things have collapsed on it. So let's just go ahead and do this right here to give you an example. So I just click on that, and it says trade Baidu as a spread. So I click on that. My order ticket comes up. First leg is sell to open January 93 put, and I'll just do 8 contracts. That's what I did in my funded account. And then I'm going to come over here and I'm going to buy an insurance policy January 11, and just scroll down quite a ways, pick up the 91s, put, same number of contracts, and right here it gives me a market of 21 cents. So I go ahead here and preview my trade. I'll just do a market order here. So we get filled, hit preview. Are you sure you want to place this trade with the given parameters? Receiving about 152 bucks in the trade, and we'll place the order. I'll go out here and go to orders. And here we go. So now in my positions, shows that I have a 93, 91 bull put spread on the trade. So we'll teach it more in detail as we go along, but I thought this might help clarify what we did on that last Baidu trade. Hope that helps, and keep coming back to fundedtrader.com, and we'll go from there.